All right, to the money desk now. Devon, so good news in terms of our unemployment rates. It's just 1%, but it's something, right?
Yeah, and I think more importantly, it's dropped for the third consecutive quarter. Now, I know we look at some of these things with a lot of cynicism because we've got such a chronic problem, but it has to count for something. Let's quickly run through some of the figures. It was unexpected because we had these persistent power cuts in the third quarter between July and September. So one would have thought job creation would have been difficult under these circumstances. Let's very quickly look at the numbers. So your unemployment rate between July and September dropping by 1 percentage point to 32.9%. It translates to 7.7 million people still out of work officially in the country. Let's roll over and look at the broader definition, the expanded definition of unemployment. And that includes discouraged workers as well. That's sitting at 43.1%, also down from the last count. But look at that, it's still a problem. We've got 11.9 million people out of work in this country. So where did the good news come from? Let's turn over and see that there were 204,000 jobs gained between the month of July to September. And manufacturing, 123,000 jobs added. In trade, 82,000 jobs, 46,000 jobs for construction. But that's an interesting one. 36,000 jobs lost with private households, which means that perhaps people may be just letting go of domestic workers and gardeners and in that realm. And then we've had a huge loss of jobs in the financial sector, mainly private companies and banks and so forth. But I tell you what, let's bring in, to unpack these numbers, Chief Economist at Econometrix, Dr. Azar Jamine. Dr. Jamine, thanks indeed for your time. Well, a third consecutive drop in the unemployment rate, it means unemployment dropped at every quarter this year so far. Surely that counts for some good.
It counts for something. What it suggests is that the economy is gradually continuing to make up for jobs that were lost during the COVID crisis. But, and the unemployment rate certainly has fallen, but it's still, you know, you still talk about 1 in 3 people without a job officially. And if you look at the expanded definition of unemployment, it's even more than that, out of work. So yes, I think we must be grateful that the situation is not deteriorating still further, and that we are making some gains as the economy gradually returns to a greater semblance of normality, people returning to working at premises where previously there was this obsession with working virtually. So yes, it is positive, but it's certainly, I would not get terribly excited and say that we've turned the corner. The levels of employment are still around 5% below where they were pre-COVID. And in the manufacturing sector, if you plot it, we are still around 5% below where we were at the time of COVID, and we're about 10% below where we were 4 years ago. So in fact, what happened is manufacturing took an even bigger knock than the overall economy on average during COVID, and started recovering quite nicely. And then in the second quarter, took a huge knock due to the floods in KwaZulu-Natal. And so it looks like a very big uptick in the third quarter, but it is really just recovering some of the losses that were incurred during the period of the floods in KZN.
Yeah, that perspective is indeed sobering when you're looking at what we've got to catch up to. I'm wondering, how did that improvement happen when we had some of the worst power cuts from Eskom in the period and chronic railway issues which hit the economy as well?
Amazingly, it does reflect a little bit of resilience that can give one some hope. And that is that as private sector businesses, you know, people are still living here and they're carrying on their work regardless. And entrepreneurs are still looking for new ventures and at times needing to employ more people for those ventures. And I suppose that is the biggest source of encouragement. This economy, despite load shedding, is not collapsing. It's not producing to its full potential, no question. but it is not collapsing. It's not good enough, but it's not collapsing either.
I want to extend that point because I was at a Reserve Bank meeting not so long ago with the media, and an interesting point coming out there from one of the deputy governors, that South Africa's economy needs to expand consistently at 5% for a few years to create jobs and to even dent the unemployment rate significantly. I mean, that brings the reality to the sort of crisis number that we have, 11.9 million people out of work.
No question that is the case, and in part it's due to the fact that the number of people coming on stream in the labor market is fairly significant, and you need to be creating at least 300,000 new jobs per year simply to accommodate those that are coming on to the labor market every year. So the moment you then look at the total number of people employed of around 11 million, and you need to create 300,000 simply to prevent the unemployment rate from rising, you realize that in order to reduce the unemployment rate, you have to create at least 500,000 to 600,000 new jobs per year, which translates into, if you believe that job creation goes at the same pace as growth in the economy, then you realize that you need to grow the economy by 5 to 6%, make a dent in the unemployment rate on a sustained basis, and you need at least to grow by 3% per year simply to prevent the unemployment rate from rising.
Yeah, and then when we sift through, Azar, Jamine, through solutions, we've seen the economic recovery plans come up. They've got job creation components to it. But by any measure, we're behind the president's ambition of getting those multi-billion rand infrastructure projects off the ground so that builders, engineers, suppliers can get work. And when you look at that 45% youth unemployment rate, which is conservative by many sort of comments from analysts, that those infrastructure projects are not getting off the ground at a pace that will satisfy or remedy, particularly that youth unemployment.
You're absolutely correct, Devin. You know, if you look at the numbers that have been put forward by none other than President Ramaphosa himself about the magnitude of infrastructural investment that has been planned and agreed to, and the number of projects that are coming on stream, you're talking about trillions of rands worth of investment expenditure that has been agreed to. Now, if you translate the implementation of such a magnitude of investment into the numbers, you suddenly come across that investment should be rising by 20-30% a year, and the economy should be growing by 5 to 7% a year. It would be a total game changer, and you'd kill two birds with one stone. Not only would you enhance service delivery and the quality of life in South Africa, but you'd also be creating the number of jobs that we've been alluding to necessary to reduce the unemployment rate. The tragedy is that those magnificently ambitious infrastructural investment plans are not seeing the light of day. And there are a number of factors to which that can be attributed. Firstly, corruption especially in regard to procurement processes, is inhibiting investors actually going ahead with every time they want to invest, there's someone who wants a bit of a handout, and so investors pull away. Secondly, you've got the relative lack of skills. We've lost a lot of skills in recent years to emigration, and to transformation, and as a consequence, we need to recreate those skills before we can really start implementing these projects. The third one, which is a very pernicious one that is coming to the fore more and more every day, is vandalism and theft of any form of infrastructural investment that is taking place. And, you've got these construction mafia. You refer to the decline in employment in the construction sector because businesses just don't want to involve themselves in infrastructural investment if you've got vandalism and their lives are threatened. You saw the headline of the Business Day today. Eskom is not managing to do what it needs to do because its management are afraid for their lives. that all those are important factors that are inhibiting the translation of these wonderful investment plans into action. The fourth factor is ineptitude on the part of many public servants who are in the decision-making realm, and a reluctance to embrace the private sector by many of these public servants who see anything to do with the private sector as bad news.